No, it's not disconnecting.
Good afternoon, participants. My name is Sarah Jijola. I work with the Nigerian Bar Association Institute of Continuing Legal Education. We welcome you to day 6 of the 7 days training on taxation, which commenced on the 11th of September, 2023. We have a very erudite facilitator this afternoon by the name Mr. Stephen Chima Arubike. He's a partner at G. Elias, a leading full-service business law firm in Nigeria. He graduated from the University of Nigeria with upper class, second class honors, and the Nigerian Law School with the first class, winning one of the overall best prizes. His practice is focused on tax, corporate law, and dispute resolution. He has advised the public and the private sector both locally and multinational clients on tax dimension of numerous seminars and complex transactions. He also represents leading global clients in significant tax litigation before the Tax Appeal Tribunal and Superior Courts in Nigeria, and during this tax audit and investigations. He is recognized as a highly regarded individual in tax and by the World Tax Ranking. He is also recognized as a recommended lawyer in dispute resolution by the Legal 500. He's a fellow of the Charter Institute of Taxation of Nigeria and also a member of the Charter Institute of Arbitration. Please, let's welcome our facilitator today, Mr. Steve Chima Arubike. You're welcome, sir. The floor is all yours, sir.
Yeah, Chima, you are muted. You are muted. Unmute yourself. Unmute yourself.
I'm very sorry. Very sorry.
Okay.
Apologies. So good afternoon, seniors and colleagues. We're going to look at value-added tax regime in Nigeria and the recent developments. Of course, we've looked at several, we looked into several taxes before now. So value-added tax, I believe, is quite simpler and impact on everyone. I don't think there's anyone among us here who have not paid VAT indirectly. You must have paid VAT in the course of transactions or in the course of consumption of goods and services. So by the end of the session, we should be able to understand the framework of the value-added tax regime in Nigeria. We also look at the distinction between VAT and the other taxes. Sorry, I'm trying to, sorry. I'm trying to share my slide. It's actually not moving. Just a minute, please. Yeah. So we'll take a look at, we are going to, at the end of the session, we're going to understand the framework for VAT system in Nigeria. We also look at the distinction between VAT and some other taxes. We also understand the VAT collection, remittance, and the return filing mechanism. We also understand the significant changes introduced by the Finance Act to Nigerian VAT regime. We also take a look at some of the contentious topics in VAT, including reverse charge mechanism and its implication for consumers and the effect of FRS power to appoint agents. So, like I said, VAT is a very important tax in the Nigerian legal system, and its importance keeps growing with years. You look at statistics, you discover that there's always increase in VAT collection by the Federal Inland Revenue every year, and it's also expected to keep on increasing. And of course, that's lately there've been several attention on VAT due to struggle on which of the tiers of government is responsible for VAT collection and administration. So what is VAT in essence? So VAT is a consumption tax, and it is levied at the rate of 7.5% on the supply of goods and services in Nigeria. It's also a form of indirect tax. We'll explain that shortly. In Nigeria, all goods and services are subject to VAT, except those that are specifically exempted from VAT. When you look at first schedule to the VAT, you see the exempted goods and services. Other than those, and also those explained under the various VAT modification orders, all goods and services are subject to VAT. The administration of VAT in Nigeria is vested in the Federal Inland Revenue Service. And of course, as I mentioned before, there have been issues lately, or there have been a running issue on whether it should be FRS or the State Internal Revenue Service that should control VAT. Every business entity in Nigeria that made taxable supply amounting to cumulatively or singular or up to 25 million naira is required to register, collect, and remit VAT to the Federal Inland Revenue on or before the 21st day of every month. Now, what we have today as VAT was, in fact, introduced in 1993, further to a military decree. So the implementation started shortly after, on January 1st, 1994. And the VAT regime in Nigeria currently is governed by the Value Added Tax Act, CAP, V1, Law of Federation 2024 as amended, and also some other, some amendment have been made to the VAT. Significantly, we have the VAT Amendment Act of 2007 and the various amendments made through the Financial 2019, 2020, 2021, and 2023. We also have VAT Modification Order of 2020 and the latest VAT Modification Order of 2021. So as a lawyer, if you are advising on VAT, these are the statutory instruments that you need to look at to advise your client on VAT. Now, for us to understand VAT, I would like us to take a look at the distinction between VAT and the other taxes. First of all, consumption taxes. Now, consumption taxes are taxes imposed on the purchase of goods and services, primarily impact on the consumer, who ultimately bear the burden of the tax in the form of increased prices. So whenever you consume goods or you utilize services, paid services, you pay some taxes called consumption taxes. So VAT is in this class of tax. Example of consumption taxes we have in Nigeria include custom duties, excise duties, import duties, and the hotel occupancy and restaurant consumption tax of Lagos State. Now, what is the distinction between VAT and other consumption taxes? Well, the main difference between VAT and other consumption taxes is in the manner of collection. Consumption taxes, such as sales taxes, are typically imposed once, precisely at the point of sale to the ultimate consumer. This implies that it is the end user or the retail customer who bear the responsibility for the payment of sales tax. In contrast, VAT operates differently. VAT is collected at various stages throughout the production and distribution process of a finished product. So what happens in VAT is that each time value is added to a product or a sale occurs, VAT will be collected and subsequently remitted to the government. So in essence, VAT is more or less a multi-stage, VAT collection takes the form of multi-stage collection process to ensure that the tax is spread across the supply chain from the production of, let's just use a particular product, let's say ceramic, from the time of, from the process of acquiring the raw material, turning the raw material to finished goods, through the distribution to the to the major distributor, to the final to the retailer. So at each stage, there will be a VAT as long as value is added in that process. So, so that's actually what distinguishes VAT from sales tax. So you just collect sales tax once, but you collect VAT through a process, and the person that the final consumer will be the person that ultimately bear the full responsibility of the tax in the form of increased price. So this VAT is collected multiple times, but we are still going to explain how double taxation is averted in the process. So, that's VAT and the consumption taxes. Now, what is the distinction between VAT and income tax? Now, for income tax is assessed on earnings, while VAT is assessed or is imposed when consumers spend money. That is, if you earn money, you pay income tax, but when you spend money, you will be liable to pay VAT. Of course, for instance, we are all income earner in one way or the other, either as employees or as owners of businesses. So when you earn income, you pay VAT. But when you spend money, you pay. Sorry, when you earn income, you pay. When you earn income, you pay income tax. But when you spend money, you pay VAT. So to put it simply, income tax is imposed on individual or company when they generate income or when they receive earning from passive investments such as interest, dividend, and rental income. When you look at CETA Section 9 and PETA Section 3, you see the categories of income or earning that were outlined there. When you earn any of the listed income, you earn income, you'll be liable to pay income tax. But for VAT, it is when you spend money to purchase goods and services. Now, sometimes it's always difficult for some people to distinguish between VAT and withholding tax. The reason is because VAT and withholding tax follow the pattern of deduction and remittance to the tax authority by the person other than the person who bears the tax liability. So VAT and what we call withholding tax is always collected or remitted to the tax authority by someone else other than the person who is liable who is liable to pay either the VAT or the withholding tax. Let's give an example. If you earn dividend income before you receive your dividend, the company paying the dividend will withhold 10% of the dividend due to you and remit it to the tax authority. So you have nothing to do with complying. You as the person earning the income will pay the tax, but you have nothing to do with the process of deducting the income and remitting or accounting for the tax, with the tax authority. So VAT follow a pattern that that's similar in a way, but not really the same. In the case of VAT, you pay for the amount of product or services utilized plus the VAT component to the supplier, and the supplier takes out the VAT component, remit it to the government, and also file returns to show that the VAT has been paid or accounted for. So you can see from that, in that respect, VAT looks like VAT is similar to withholding tax, but they are not really. As we have already explained, VAT is a consumption tax, while withholding tax is a mechanism for collection of income tax. So VAT is also distinct and an independent tax, while withholding tax is not really an independent tax. Rather, it serves as a mechanism for the advanced collection of income tax before the tax liability is due. So you just pay VAT, but for withholding tax, when your income suffers withholding, that is not, it is just a mechanism to ensure that you account for that tax. It is not really a separate tax like VAT. So that's why, consequently, whenever you pay withholding tax, or rather, whenever your income has suffered some form of withholding, or the amount that have been withheld for your income will serve as a credit against future income tax payments, usually at the end of the year. Sorry. So in practice, the tax authority, whenever you pay withholding tax, you always the person whose income has suffered the withholding always get a tax credit to use it to set off for the amount that have been deducted at the time the person pays the income tax. So they are not the collection or the mechanism of collecting VAT somehow similar to withholding tax, but the two are not the same. So we also need to look at VAT exempt and zero item. You understand? I've already mentioned that some goods and services are clearly exempt from VAT. However, some items are zero rated. So, what is the distinction between zero rated and the VAT exempt product or services? Now, zero rated items are items that are liable to VAT but at a zero rate. So in essence, they are in effect exempt from VAT when they are sold to consumer. But the supplier of zero rated item or zero rated goods and services are entitled to claim credit for the VAT they have paid that have been paid on the product or that have been paid on the input or the raw material used to produce those goods or services. This means why the end user does not pay any VAT on the zero rated item, the business entity that supplied them or that are involved in the production and distribution of zero rated item can recover the VAT that have already been incurred as on their cost. So, but for VAT exempt goods or services, they are goods and services that are not liable to VAT when they are sold to the end user or consumer. But the business entity involved in their production or in their distribution process cannot claim credit for the VAT they pay on input or on the raw material used to produce the VAT exempt products. So the distinction, when goods or services are VAT exempt, the seller do not charge any VAT on the final sale to the consumer, just like the zero rated product. However, unlike zero rated goods, the businesses involved in producing or in selling the VAT exempt item cannot claim a credit or a refund for the VAT that have been paid on their input or raw material or other associated costs with other costs associated with the production of those goods and services. This means that the VAT incurred in the production process of VAT exempt product became a cost for the business, and that they cannot be recovered. The cost cannot be recovered from the tax authority, unlike zero rated products. So some of the zero rated items include goods and services purchased by diplomas. And of course, diplomats they do not pay tax or taxes in their host country. So whenever they are purchasing products, if they have been VAT, if they pay for those products less VAT, then goods purchased for use in humanitarian donor-funded projects and non-oil export are some of the zero-rated items. For the VAT exempt products, I would like you to take a look at Schedule 1 of the VAT Act and also the various VAT, the latest VAT modification order. Although I've listed some of the goods that are exempt from VAT, but if you look at the modification order, you see more clarity, more minute details about some of these VAT exempt products. For services, we have some exempted services, and we have listed some of those services. Medical services, services rendered by microfinance bank, People's Bank, and mortgage institution. Also, exported services are also exempt from VAT. We still say something about exported services, especially as a result of the controversy regarding them. So we We also have exported goods. All goods exported out of Nigeria are zero rated. We have other exemption, other VAT exemptions under the VAT Act, including lease and other, sale of granting of lease or other interest in land. They are VAT exempt. Securities, that's shares, bonds, and so on and so forth, are VAT exempt. Also, other exemption that we need to pay attention to is regarding assets transferred during corporate reorganization. But we'll say more about this when we look at some of the significant changes in the VAT Act. Now, when I was talking about zero-rated products and VAT exempt goods and services, I made mention of input VAT. So what is actually input VAT? In VAT mechanism, like I've said earlier on, VAT is collected at various stages of the production and distribution process. But does it actually mean that you just pay 7.5% of the consideration amount at each of these stages? No. The mechanism used to ensure that there is no double VAT collection is known as input and output tax or VAT. So what is input VAT? Input VAT is also known as input tax, and it is the VAT that businesses pay when they purchase goods and services for their operation. That's if you are involved in the production of goods and services. Let's say you produce ceramics. When you purchase the raw material from the person, who dig out either the sand or whatever you use to produce mechanic, you pay VAT for purchasing that product. The VAT that you pay to make such purchase is known as input VAT. It is VAT paid on input or raw material for production of goods. As a consumption tax, VAT is typically, as I said, is levied at various stages of the production and distribution process. And businesses can often claim what they have paid as input for the production of a particular goods. And that VAT that is paid is known as input VAT. Now, the next is the output VAT or the output tax. The output VAT is the VAT that businesses charge charge their customer when they sell goods and services. I'm using an entity or a company producing ceramics. When the company purchases raw material for production of ceramics, it pays input VAT. As the company, of course, eventually will sell the ceramics, the final product to a major distributor or to major distributors. The VAT charge for that sale is known as the output VAT. So what the actual VAT is the difference between the output VAT and the input VAT. So it is called the output VAT. I say it's called output VAT because it represents the VAT collected by the business during each sales transaction. It is when the company is accounting for the VAT, what they do is to deduct the input VAT from the output VAT, and the remaining will be accounted to the tax authority as the VAT that the company is liable to pay. So what is the why do we have this concept of output and input VAT? Now, this concept is very essential, is an essential component of the VAT system, and what it does is to ensure that businesses are only taxed on the value that they added to the product during their production or distribution process. So that's why I say VAT is charged along the production chain when value is added to ensure that it is only the value added that is charged. You have to, it is this concept of input VAT and output VAT, that the tax authority devised to ensure that you don't pay VAT twice. So the output and input VAT concept encourages businesses to track their transaction and also maintain proper record to ensure accurate reporting of their transaction to the tax authority. So it helps to ensure that the tax burden, the VAT tax burden, is borne by the final consumer or the end user, not the entities along the chains, production chain. So it is the end user of the goods and services rather than the business along the supply chain that bear the burden of VAT. So these output VAT, input VAT system allow businesses to recover all the input VAT that they paid on their purchases, while ensuring that it is only the consumer that ultimately pay the tax when they make purchases. So you see, we have also, this slide explained this in detail. Now, as I mentioned from the beginning, there have been significant changes in the VAT regime in Nigeria since 2019. The successive finance acts has changed VAT system in significant way, and it is some of these changes that we're going to look at. And of course, the most visible one is the increase in rate, which I know all of us are aware of. Before 2020, the VAT rate is 5% of the consideration paid for goods or services. From that, the Finance Act 2019 increased the rate from 5% to 7.5%. And of course, if you normally check your receipts, you see that significantly you've been paying more in VAT tax than before, following the increase. Apart from the increase, there have also been significant change in the collection method. Before 2019, or say before 2020, the collection, we don't have reverse charge to all goods and services. I would say more about this in the course of the lecture. Finance Act 2019 introduced what we call reverse charge mechanism to all consumers. So what's happening is that consumers are now required to self-account for the VAT and remit the tax to the FRS in the currency of the transaction where no VAT element is charged on the invoice. So when there is no VAT in the invoice, there is now an obligation on the person consuming the relevant goods or services to take out the VAT components and remit it to the tax authority. That's in Finance Act 2019, Section 28 to be specific. So apart from that, there's also the non-resident entities are also to register for VAT and include VAT in their invoices. Before 2019, there have been struggle on how non-resident entity supposed to how services rendered by non-resident companies supposed to be accounted for. And because of that controversy, some amendments were made to Finance Act both 2019 and 2020. The significant one is that a non-resident person that makes a taxable supply to Nigeria is now required to register for VAT, obtain TIN number, and include VAT on his invoice, and also and include VAT on his invoice. Before now, there have been there are some controversy on this because a non-resident entity may not be doing business in Nigeria. A term that was used under the old VAT Act, giving an impression that when the non-resident entity is not doing business in Nigeria, it has no obligation to charge VAT, but this is no longer the case. whether the non-resident entity is doing business in Nigeria or not. There's an obligation on that entity to register for VAT, obtain TIN, and also include VAT on its invoice. However, the framer of the Finance Act also recognized that sometimes it may be difficult for non-resident entity to get this done by itself. So they allow non-resident entity to appoint a representative in Nigeria for the purpose of its tax obligation, its VAT tax obligation. The law also empowered the Federal Inland Revenue to issue guidelines on how to implement the new amendment. There have also been, there's also an obligation, so there's also obligation on the FRS to refund tax credit on a taxable person who purchase import, who purchase goods and services. Before now, it's always a problem on a person. It's always a problem on an entity regarding on getting a credit when he purchase or import goods and services to be used to produce new product on which output VAT is charged. So now that person, once you fall under this category, you are entitled to a tax credit if the input tax exceed the output tax. Maybe that's also what I didn't mention. A situation where the input tax exceeds the output tax. Although before FRS will allow you to get this credit, the form of audit may have to be conducted to see, because it is not in the normal case that input VAT will exceed the output VAT. But if genuinely the input VAT is higher than the output VAT, the taxable person is entitled to a tax credit from the FRS. So that's the amendment. Now, there's an amendment on business, on mergers and business combination. Before now, there's no clear exemption on VAT when there is a merger and acquisition or business combination, and assets are transferred from one business entity to another in the course of a business reorganization. Now, in Finance Act 2019, there's an exemption, and that exemption, VAT exemption, is subject to certain conditions. Companies involved in merger and acquisition or business combination or reorganization that want to take this exemption must be related 365 days before the commencement of the mergers and acquisition of business combination, and also after the merger or the business combination, the entity must still remain related. So once these conditions are met, mergers, assets transfer in the course of a business reorganization, mergers and acquisition will be exempt from the value added tax. So what FRS did is to ensure that companies are not just doing this to effect mergers and acquisition. They want to see that there's a genuine intention by the company, or that the companies in questions are actually related. And of course, the window given for the relatedness after the completion of the business combination or merger or acquisition is just 1 year. So the company must remain related. If there's a disposal, or the companies are no longer related within this time frame, the VAT exemption enjoyed have to be paid back to the FRS. So the next introduction is on compliance threshold. Now, when I started, I mentioned that charging and compliance, VAT charging and compliance threshold is set at 25 million naira. That is to say, for a business to be obliged to charge and remit VAT, it must have met a 25 million naira threshold. That is, if the business is not making up to 25 million naira in annually in that particular assessment year, it is not liable to charge or remit VAT to the tax authority. We'll still say more about this on whether this exempts the consumer from paying for VAT when we talk about the reverse charge mechanism later in the course of the session. Another introduction is that residents, another introduction is still on the 25 million naira turnover threshold. After the enactment of Financial 2019, the FRS think it is not necessary for the upstream petroleum operators to enjoy the 25 million naira threshold. So Financial 2021 exempt them from the threshold requirement. What this means is that once you are in the upstream petroleum sector, whether or not you have met the 25 million naira turnover threshold, you are still liable to pay to charge VAT and also to file VAT return with the FRS. So upstream petrol operators are exempted from the requirement. So there's also, okay, I think I've talked about this. Yet some other innovation that we have are mostly expansion of vatable goods and services, the expansion of products and services that will be liable to VAT. Before now, it is not clear whether VAT are chargeable on intangible product and assets. So the Financial 2019 clearly state clearly that the supply of intangibles are liable to VAT. VAT Act Section 2 also have also been amended to reclassify intangibles and incorporeal assets as tangible supply. Now, what happened is that in the 2019 Finance Act Amendment, intangible assets were classified as services. And because they are classified as services, companies will not be able to enjoy will not be able to reclaim them, to reclaim the input VAT paid on intangibles. So in 2020 amendment, there was a reclassification. It's not really a new, it's not an expansion. It is more or less a reclassification. They have to reclassify intangibles as taxable supply of services and not goods. So in principle, it means that any input VAT can be claimed on such assets. So you're also going to see from the slide that commercial aircraft and their parts are exempt from VAT. Nigerian registered commercial airline tickets are VAT exempt. We have higher of rental of agricultural products. They are VAT. They are exempt from VAT. Also movable. There's also movable structure on land are now subject to VAT. Following clarification, before now, there have been a controversy on whether lease is subject to VAT. In fact, there are two tax appeal tribunal decisions that dealt on this issue, and the tribunal took different positions on this issue. One of the cases state that the lease of commercial property are not VAT exempt, but lease of residential properties are VAT exempt. So there's a need to clarify this. So you see under the definition of goods and services that land and building, money and security were clearly exempt from VAT. After that amendment, I think the tax authority took steps to correct itself by showing clearly that if there are movable structures on land, those movable structures will be subject to VAT, while the immovable structure and the land itself, the interest in the land, will not be liable to VAT. So you also see that there have been changes on the penalty regime. There have been increased in the penalty regime. So if you fail to pay VAT, the penalty is stiffer, and you are also liable to pay interest on that. The next, another major introduction is expanding the power of the Federal Inland Revenue to appoint VAT, to appoint agent for purpose of VAT collection. So we'll say more about this and look at one of the a recent case on that subject. Another power conferred on the FRS is the power to review related parties' transaction. FRS have now power to review transaction between related parties to ensure compliance with the arm's length principle. You recall when we had a session on transfer pricing, we mentioned, the speaker mentioned that the requirement is that transaction between related parties must be conducted at arm's length. And failure to do so, FRS has the power to adjust the transaction and ensure that adequate tax or taxes will be paid. So we don't have any provision in the VAT Act before now, specifically on this. So VAT, the Finance Act 2023 now empowered FRS to review related party transaction to ensure compliance with the arm's length principles, specifically on VAT assessments. So pursuant to that power, the FRS may disregard or adjust any artificial or fictitious transaction or disposition which is considered appropriate in order to ensure that adequate VAT is paid. Of course, where parties are not conducting at arm's length, they can actually reduce the transaction value, reduce the amount involved in the transaction to ensure that the VAT paid will be lesser. So FRS now has a statutory mandate to, to look into such transactions to ensure that the adequate tax is paid. So we are going to look at some of the controversial issues in VAT that were resolved by the Finance Act. The first one is on the reverse charge mechanism. From what I've said before, said earlier on, VAT collection and payment. VAT collection and payment is the responsibility for VAT collection and payment is on the supplier, not on the consumer. It's on the supplier, not on the consumer. However, in before there are some, we have another mechanism where a directly opposite mechanism in VAT collection under some special circumstances. So that is what we call reverse charge mechanism. Reverse charge mechanism simply means imposing a direct responsibility on the consumer to self-account, charge, and remit the VAT on the transaction contribution to the tax authority. Now, this reverse charge mechanism is common in cross-border transactions where the suppliers and the consumers are not in the same jurisdiction. Now, this reverse charge mechanism has now been entrenched in Nigeria by an amendment made in 2019. But before 2019, there are some aspects of reverse charge mechanism. If you have rendered services to ministries, statutory bodies, or agencies, you will recall that they will not pay you with VAT components. They will not pay you for the services with a VAT component. They will just pay you the consideration or the contracted amount. But when you look at section, this is because under section 13 of the VAT Act, ministries, statutory bodies, and agencies are required to take out the VAT component from the fees that's supposed to be paid to the supplier of services and pay that directly to the government. The section 13 was also amended, mandating the companies in the oil and gas sector to do the same, to deduct VAT as source before making payment of the before paying for the consideration of the services or rendered to them or goods that they are purchasing. There's also another aspect of a reverse charge mechanism before 2019 is on the on imported product. Whenever you import a product, you have an obligation. You pay the VAT. You pay the VAT at the border. You don't even you pay the VAT at the border. That the custom authority will collect the have to impose the VAT, ensure that you pay and remit it to the government. So before 2019, we have an element of a reverse charge mechanism. However, there was a lacuna in Section 10 of the VAT Act on whether reverse charge mechanism is applicable to imported services. The controversy is hinged on a lacuna in the VAT Act. If you have read the VAT Act did not only, the old VAT Act, Section 2, obligates non-resident company suppliers to add VAT when they are doing business in Nigeria. So that was misconstrued to mean that if the non-resident company is not in Nigeria, if the non-resident company is supplying services to a Nigerian company that and fail to add VAT on its invoice, that VAT, the Nigerian entity will not be responsible for remitting VAT. So this lacuna led to a dispute between tax authorities and taxpayers in two prominent cases. We have the Gazprom and FRS and the Vodacom and FRS. Now, in Gazprom, non-resident consultants providing services to Nigerians from overseas were held not to be carrying on business in Nigeria, and as such, as envisaged under the VAT Act, and the TAT in that case held that the failure of that non-resident company to issue invoices reflecting VAT element on Gazprom by the consultant, that the Nigerian entity Gazprom is not liable to pay VAT. I think that's a misreading of the VAT Act. Luckily, at the High Court, the decision was reversed. The High Court held that the non-resident consultants, by providing consultancy services to Gazprom, were carrying on business in Nigeria, and so were bound to register for VAT in Nigeria. Even the court emphasized that the absence of invoices will not detract the Nigerian consumer from VAT liability. What the court is saying is that even if the non-resident consultant, the consultant that is supplying, that is providing services to a Nigerian, did not provide for VAT in the invoice, the Nigerian recipient, the Nigerian beneficiary of the services, had an obligation to actually take out the VAT component and remit same to the tax authority. The same decision was arrived at Vodacom services. In fact, Vodacom was fought all the way to the Court of Appeal, and the FIS won that case. The Federal High Court in that case held that the decision of the TAT that Vodacom was bound by Section 10, Stop 2 of the VAT Act to pay VAT, notwithstanding the failure of the service provider, the New Sky, to register for VAT and issue invoice with elements on Vodacom. So whether or not there is a VAT component on the invoice issued, the court held that there is still an obligation on the consumer to take out VAT component and pay it to the FRS. In fact, in that case, the court endorsed what we call a destination principle. Destination principle is a principle that states that the VAT will be paid will be in international transaction. VAT is payable at the country where consumption takes place. That is where the services is being utilized, is where the services or the goods in question is being utilized in international commerce. The destination principle endorses that it is at that country where VAT will be accounted for. We have an origin principle. Origin principle says it is at the point of production of the goods and services. But we have in Vodacom case, the court endorsed destination principle. Now, the VAT Act in section 10, according to the court, create 3 distinct statutory duties. Now, 2 duties on the non-resident company. The duties on the non-resident company are to register the VAT. Second, to include the VAT in its invoice. The third duty is on the person to whom the goods or services are supplied in Nigeria, and the duty is simply to remit VAT. So what they are saying is that even that these duties are distinct in the sense that even if the non-resident company have not included VAT component in the invoice, the Nigerian, that does not, the obligation on the Nigerian consumer is still there. The Nigerian consumer still must, fulfill its own liability. Now, because of this, some of these, because of the lacuna in the law, the Finance Act 2019 amended the VAT Act. In section 14, there's a new subsection that provides that clearly that where a person to whom taxable supply are made in Nigeria is issued an invoice on which no VAT is charged, such person shall self-account for the tax payable and remit the output VAT to the FRS. So in trying to solve this problem at the international level, FRS went extra mile by endorsing this concept for all VAT purposes. So unlike Vodacom and Gazprom, that is limited to international transaction for provision of services, the amendment in the Finance Act section, specifically section 37, that created a subsection 4, provides for this destination principle for all consumers. So in essence, FRS is now creating more avenue for tax collection, for VAT collection. What the section is trying to ensure that if in the supplier failed to issue invoice, that has VAT, or even issue invoice at all, but the consumer have received the product and there's no invoice or invoice that has no VAT, the FRS can proceed against the consumer to get VAT. So unlike the principle affirmed in Vodacom, the statutory provision in section 14.4 is all encompassing. It is not restricted to services imported into Nigeria or received from non-resident company. It applies to all invoices issued further to taxes on which no VAT is charged, whether goods or services. So this is an area that we as consumers have to pay attention to. So what it means is that even if in the normal process, you suppose the person, the entities that's supposed to collect and remit VAT is the supplier. If the supplier have not issued invoice that has VAT component, you are not just paying. Yes, you can pay the supplier the amount in the invoice, but the VAT component, you also have the obligation to remit the VAT to the FRS. That's where the supplier failed to include the VAT on the invoice forwarded to the consumer of taxable goods and services. The consumer will be responsible for accounting for the VAT and remitting the output tax to the FRS within 21 days of the purchase or receipt of the supplies. So VAT Act does not purport to change. So the question now is, does it mean that the supplier does not, don't need to do anything, or if the supplier fail to add VAT, that there is no legal, there's no sanction, or there's no there's no remedy, or the FRS cannot proceed against the supplier again, since the responsibility have been shifted to the consumer. No. The VAT Act does not propose to change or extinguish the primary statutory obligation of a vendor or a supplier who's supposed to charge VAT as mandated by law. So the supplier is still in violation of the law, and the FRS can proceed against the supplier. But as an alternative, if the FRS thinks the best is to proceed against the consumer. Of course, in some cases, the consumer may be a big corporation that FRS can proceed against. Yes, the FRS can now proceed against the consumer to ensure that VAT, the adequate VAT is collected. So kindly know that the failure to issue an invoice is an offense under the VAT Act. So if you are a supplier, you are still responsible for issuing an invoice that has VAT component, and failure to do that is an offense. A person who failed to issue a tax invoice for goods and services supply is guilty of an offense and could be liable to a fine upon conviction. So what is the implication of the reverse charge mechanism? Now, does it mean does it mean that the goods in question, the threshold will not apply again, or rather, what is the implication of this on VAT on the threshold that the turnover threshold that we have mentioned? Now, when you look at the threshold requirement that we have mentioned before, it gives inclination, or people try to assume that the VAT threshold is actually a VAT exemption. No, VAT threshold, that's if the supplier or if the taxable person have not met the threshold for charging or filing VAT, does it mean that they won't be VAT at all? In fact, it is this reverse charge mechanism that clearly shows that even if the supplier or the taxable person have not met the 25 million threshold, it is not an exemption from VAT at all. The consumer, in that case, is the only entity that's supposed to remit the VAT. So you have to be very careful now. Sometimes if you receive an invoice that have no VAT component, it could be that the taxable person have not met the 25 million annual threshold for him to be responsible for charging VAT. So what we just simply need to do is to take the VAT component and pay to the tax authority. So the VAT Act Section 15, amended by Section 19, exempt from VAT registration and filing requirement a taxable person with aggregate supply below 25 million in a calendar year. So the VAT Act is silent on whether the VAT threshold provision affect the obligation of a person who received the taxable supply with no VAT invoice. However, FRS now gave a circular. FRS now sent out a circular in 2020 to give a clarification on this issue. The FRS position is that where a taxable person received taxable supply for which VAT was not charged, either because the person or the taxable person is below the threshold, or for any other reason, the person receiving the supply shall self-charge and account for VAT. And I agree with the FRS, because the 25 million threshold is not a VAT exemption. And when you read the provision clearly, you see it is not a VAT exemption. It is more or less a exemption from VAT compliance, a VAT exemption from charging VAT or remitting VAT. And of course, the burden for the liability for payment of VAT is not on the supplier, it is always on the consumer. So the consumer have not been discharged in any provision in the VAT Act from paying for VAT. And the reverse charge mechanism even make it clearer that it is the consumer that's supposed to pay VAT in that case. Now, the next topic that we also need to look at is on the power of the FRS to appoint a collection agent. And if you've been following news recently. Sometime last year, FIS issued a public notice mandating some companies operating in some sectors to appointing them as a collection agent. Is it really something new? No, it's not really something new. Now, the obligation, the appointment of agents has always been in the VAT Act. And of course, as I mentioned before, you see that government agencies and departments have always acted as VAT agents for the government. And of course, you may say it is just government, so there is really no agency here, because it is still the same government collecting this tax and remitting it to the FRS. However, in section 13.2 of the FRS Act, that agency obligation was imposed on upstream oil and gas operator. Now, in the public notice issued by the FRS in 2022, FRS stated clearly that effective January 2023, all telecommunication companies and the money deposit bank are going to be are hereby appointed, will be acting as agents, FRS agent for purpose of VAT collection. So what it means is that when you render services to any of these of the listed bodies, telecommunication companies, money deposit banks, companies in the upstream oil and gas sector, government agencies, the entity in question will always collect VAT. Will not pay you your fees with VAT. So you have no obligation, you have no compliance obligation. This is very, very important because whenever FRS is conducting a VAT audit, what they simply do is to look at your turnover and charge 15%, sorry, and charge 7.5% as VAT if you have not accounted for VAT, or they will do so and ask you to bring evidence that you have paid your VAT in full. For law firms like us that render services to banks, telecommunication companies, and the oil and gas sector, you must ensure that you separate invoices issued to telecommunication companies and money deposit bank, because in those cases, you have no obligation as a taxable entity to account for VAT. So you have to separate them in the course of the audit, because FIS will not do that for you. You have to ensure that all the entities that have been appointed VAT agents that are now supposed to collect and remit VAT to the government, if you have rendered services to them, the liability of accounting for VAT is no longer on the law firm or the individual lawyer. It is on the companies, those companies in question. Now, an aspect of agency appointment generated controversy that led to a lawsuit, and the decision which was decided earlier this year, that both operators and the FRS. Now, in the case of both operators and FRS, the FRS appointed both and OBA operators as agents for the purpose of collecting VAT on transactions that occur in both or OBA platform. Now, FRS based the decision to make the appointment on a provision in the VAT Act that empowered FRS to appoint any person, any other person, other than a taxable person or a person in the transaction. You can appoint any person. So both operators went to court and challenged the validity of the appointment. However, the court affirmed the position of FRS and held that the the appointment of both and OBA, then the appointment of both here as VAT collection agent under Section 10 is in order. The court ruled that the phrase any other person include any person that is in position to account for the VAT. Now, remember in the OBA platform, in the OBA or both platform, or even the argument that was advanced by both argued that it is neither the consumer or the supplier of the services in this case. Both argument is that it is more or less like a facilitator or an agent, and not being either consumer or the supplier of the services. It has no VAT obligation. And as a matter of fact, both even argue that his own service, his own income, the commission that he earned in the process is liable for to VAT, and it has fully complied with that. Therefore, it has no right to account for for the VAT of either the customer or the hailing the taxi driver. However, the tax tribunal construed that term any other person in a very liberal manner, and I think the decision is in order because yes, even though both is neither a consumer or a supplier, but both play a very crucial role in the process. Both collect the money, pay do the accounting process, pay the drivers, and also pay the cab owner. So if it can collect the money on behalf of the cab owner, it can also take out the VAT component from the consideration and remit it to the FRS. So the tribunal ruled that the FRS acted within the law by validly exercising its power to appoint both as a VAT agent from the activities of suppliers of goods and services who use the platform of both to meet the needs of the consumer. The TAT decision in both cases seemed to have granted the FRS unlimited power to appoint any person as a collection agent in respect of VAT. I don't really know whether this power will have limit or any person can advance an argument to counter FRS. I think maybe subsequently there could be more interpretation to this, because if I don't have any fund belonging to that person, I shouldn't have the obligation to account for VAT, but that will not apply in this case because OBA or both receive funds. Whenever payment is made through credit card or through debit debit card, both receive payment, so it may not really apply here. Now, another controversy, another case that we also need to look at is the Alan Gray case. Now, in that case, the TAT held that services by a Nigerian resident to a related non-resident company does not qualify as an exported services. Now, I've already stated that the exported services, that is services rendered by a person in Nigeria to someone outside Nigeria, is exempt from VAT. However, Alan Gray case is a bit peculiar, and the decision of the tribunal, I don't know, maybe we need to pass the judgment on whether it is justified. What happened in that case? FRS audited Alan Gray for tax and financial records for 2015 to 2017, and discovered that Alan Gray Nigerian Limited had been filing nil return for the period. He then raised a VAT assessment on Alan Gray. He satisfied the Alan Gray appeal to the TAT, challenging the VAT assessment on the ground that the services it provided were exported services and therefore exempt from VAT. Now, Alan Gray relied on an agreement between it and the parent company in South Africa, where it was merely appointed as a sole agent to represent Alan Gray International on equity funds in Nigeria. Now, in the judgment of the tribunal, in the judgment, agree with the FRS that the services which flow from a service provider in Nigeria to a third party, such as a person resident in Nigeria, on behalf or for the benefit of person outside Nigeria, do not constitute as exported services. That is, if a company in Nigeria is providing, if an affiliate or a related company in Nigeria is providing services to a parent outside Nigeria, that it will not qualify as exported services, simply because, according to the tribunal, the Alangre Nigeria is now a fixed base of the foreign parents. So the tribunal concluded that Alangre International was essentially carrying on business in Nigeria and earning profits through Alangre as its agent. And therefore, Alangre, as the agent of the parent company in Nigeria, were liable to satisfy the tax obligation of Alangre International in Nigeria in relation to the VAT obligation arising from the services performed under the agency agreement. Now, the tribunal distinguished the Vodcom and FRS case and held that that case is not applicable. Now, immediately after that decision, the FRS, the Finance Act 2020 amended Section 40 by providing that the services rendered in Nigeria by a person physically present in that by redefining exported services to mean the service rendered in Nigeria by a person physically present in Nigeria at the time of providing that services, and put in a proviso to the effect that a fixed base or permanent establishment of a non-resident company in Nigeria shall not qualify as exported services. That is, if the foreign company has a Nigerian company that is providing services on its behalf, that it shall not, the services being provided in the circumstance shall not qualify as an exported services. So we've gone through some of the mechanism for collecting VAT in Nigeria. We looked at the output, input VAT mechanism. We've also seen some of the VAT exempt.
Sorry, Steve, I think you should be getting ready for question and answer session.
I'm rounding up. We've also seen some of the recent changes in the VAT regime, and also some of the contentious issues that we as lawyers need to pay attention to. Thank you very much, gentlemen. Doctor, we can't hear you.
I say thank you, Steve, for the very detailed lectures, very clear. And I'm sure that anyone who picks up this, the slides will definitely get more. So it's not in doubt that Steve has done justice to this topic by treating most of the nitty-gritties and the thing that any tax practitioner or someone who wants to understand stamp duty need to know. So at this time, we're going to go into question and answer session. We've already received some questions, which I'm going to read out to Mr. Steve to help answer. And once again, I thank the members of Nigerian Bar Association and all the participants for taking time to attend our session. The last session is going to be tomorrow. Okay, going to the questions. The first question was asked by anonymous attendee. And the person asks, please, what is the procedure for imposing? There are two questions. The first one is, please, what is the procedure for imposing and implementing a new tax into the society? Obviously, this is not value added specific, but I think Steve, you can throw light on this. Do you answer it, or do I go to the second question?
Okay, maybe let's take it one after the other so that we don't confuse it. Now there are three stages in tax imposition. The first stage is enactment of the law clearly imposing tax on a subject. That is the imposition stage. Then the next stage is assessment, quantifying for instance, if you want to impose, let's say, another VAT or consumption or whatever tax, you have to be very clear in the law that you intend to impose tax. You state the percentage and the subject, that is the entity, the person, individuals, either individual or businesses that's supposed to that are liable to pay the tax. Then the next stage is assessment. The assessment stage is quantifying the amount due from the subject based on that on the tax. That's when we always talk about tax assessment. I receive assessment from FRA, I receive assessment from LRS, I receive assessment from this or that. So that is the assessment stage. Then the next stage is enforcement stage. The enforcement stage, in effect, actually come into being where you have failed to pay the tax. So, the critical aspect in introducing new tax is to pass a law by the legislature. We are in democracy, and the tax is founded on democratic doctrine. So there should be a body responsible for imposing the tax, which is the legislator. After, then the assessment is carried out by the agency of the executive, the FRS or this thing. Then we have the enforcement. The enforcement, of course, in the enforcement stage can take several forms. It can be by audits, conducting audit and investigation, taking the defaulting taxpayers to the court or tax tribunal to ensure that the tax is collected. So that is the stages.
Okay, thank you. The next question: can taxes be deducted directly from the bank account of a taxable entity using a court order from the Federal High Court, enabling the bank to do so?
Well, there's what we call power of substitution. The power of substitution is a power given to the tax authority to take out money of a tax defaulter in the custody of a third party. It could be a bank, it could be any other person that is in custody of such funds. Now, but there are conditions to exercise such power. You must show the person who is in custody of the money that the entity in question is in default of his tax obligation, his or his tax obligation, and that tax has become final and conclusive. There's actually a case on that. And once you have certified that, you have certified the condition. Yes, if the person has an account in the bank, there could be another directing the FRS to apply that money in the bank account to satisfy the tax liability of the taxpayer. It's possible, but there are conditions.
Thank you. The next question is from Max Ikongwe. And I'll take this opportunity to thank Max Ikongwe. He has been participating in almost all the sessions.
I noticed that.
So I personally noticed Max Ikongwe. He has been very active. Max said, so with VAT exemption, does that mean a pharma company cannot claim input VAT on the chemicals purchased to produce its drugs, despite paying VAT on those drugs, on those chemicals, I mean, Is this not a disincentive for such products and counter to the policy of making them VAT exempt? I think you just want to know a
Yeah,
pharmaceutical company that purchases chemical that are used in producing drugs.
yeah.
Okay.
Well, we also need to look at the VAT exemption order, because medical supplies are VAT exempt, and when you look at the VAT exempt VAT modification order, it gives more detailed information on the materials that will be exempt from VAT. So if those materials are one of those, well, already the material will have been exempted from VAT. Otherwise, there won't be any exemption. Yeah, it could be this incentive, but you also understand that the issue of exemption, zero rated, these are a matter of tax policy. Maybe if those chemicals are not exempt, but the final product are exempt, maybe it is something that we need to advance to ensure that they are enjoying the full exemption from the production to from the production stage to the final product. Because if you just exempt the drug and you are not exempting the raw material used in producing them, I mean, that would be a disincentive, but that is the law. But like I say, we need to look at the detail of the modification order. Like there are several things in several information in that modification order, that could include materials and so on and so forth. But what is clear at this stage is that medical supplies are exempt from VAT, and if the raw materials are not exempt, it will also impact on the final product in one way or the other.
Well, I think the chances are that most of those chemicals are going to be exempted. There won't be any inputs, because the question now is whether the input VAT, if an input VAT is paid on those chemicals, how do you realize that when there's not going to be any output VAT? So chances are they're going to be exempted, but if they're not exempted, I am not seeing the producer, the producer not adding money to recover the amount expended. So that will form part of the price of the product. You may not call that an output VAT for the purpose of
claiming,
recovery.
Yeah.
Recovering the input VAT paid. So you rather add it as a price, as a cost of production that will go in that case. Okay. The next one will be from anonymous attendee. Thank you for a very educating session. My question is, one, when a law firm, when a law firm is in rendering its professional services to a client, and then a bill of charges is sent out, is the fee to be paid to the law firm subject to withholding tax?
Absolutely, yes.
Okay.
Absolutely, yes. It is subject to withholding tax, but remember, law firms are either individuals or partnerships, so the withholding tax will be 5% instead of 10%.
Okay, because the withholding tax relates to the income tax, not necessarily
VAT,
the VAT,
yes.
because law firms are not legal person on their own, so the individuals or partners, they pay their personal income tax. The second question asked by the same person: can withholding tax and VAT be levied on a single transaction?
Yes, of course, but not the same person is paying. Not the same person will be liable for payment of both withholding tax and the VAT. If you look at my explanation, a single transaction can give rise to expenditure and income. Here, in a transaction chain, the person spending is in one side, while the person earning is in the other side. Let us use a law firm, for example. When a law firm renders services to a client, the client makes payments while the law firm earns income. the withholding tax will be on the income due to the law firm, while the VAT will be on the professional services that the law firm client will be paying. So a single transaction can give rise to both taxes, but not only one. There are two entities in every transaction. One person pays the income tax, while the other person, the person consuming the services, pay the VAT.
Yeah, that's a very good one, Steve. And another way of understanding this is asking yourself, who bears the incidence of the tax?
Yeah.
Because there are two different taxes here now, two different forms of payment. Withholding tax is not actually a tax, but a means of tax collection. So the withholding tax stands for the income tax, which you as a lawyer is going to pay at the end of the day. And definitely you get your withholding tax credit notes for that. The VAT, the incidence falls definitely on the last consumer who contributed nothing in the chain of production. Steve actually explained that VAT is paid anytime value is added. So the person that will bear the incidence, you are not the one paying the VAT, obviously. And if there is going to be, if there is an input VAT you pay, definitely that will be factored in at the end of the day when you're going to remit your, the difference, you subtract the input VAT from the output VAT. The output VAT is the VAT you are adding to your final product when you're selling it. The input VAT is the VAT you paid when perhaps you bought the materials with which you produce the final product you are going to sell. So in the end, someone who adds value in the chain of production does not bear the incidence of VAT, but rather the last person who is going to be the consumer. That's the way it's structured. So in any way, the answer is yes. You can pay that single transaction can attract the two. Okay. Anonymous attendee. Okay, you're just talking about how to get the materials. You'll get the materials after tomorrow. We'll arrange for the materials to be sent to all the lawyers. And as long as you attended, it will be sent to you. Biliaminu Aziz. Okay, it's just a comment. Good afternoon, and thanks for impacting knowledge. Max Ikongbe again. Max asks, in the context of a law firm, is VAT levied on the entire amount invoiced a client, including amount invoiced for disbursement and expenses? Example, in incorporating a company, I invoiced that follows. Okay, I think he asked, explaining that in the next question.
Yeah, I've seen
I
it.
invoiced, huh?
Yeah, I've seen the question.
I can see the invoice as follows. Yeah, what he's asking, he wants to know whether VAT is levied on the entire amount invoiced the client, including amounts expended for invoice for the adjustment and the expenses.
Okay, I think I need to give a clarification for that. Now, let us, since we are using law firm as an example, as a taxable person, the law firm can only charge VAT on the invoice, not on the disbursement or expenses. However, remember that the person where the expenses will be made, the person can actually charge VAT. But this one is not the law firm. Let's assume let's assume that the client asks you to buy certain materials, maybe for example. Of course, the person at the other side can add the VAT, but on the billing, the lawyer's fees is only the lawyer's fees that will be subject to VAT in the hand of the client. That's the lawyer's obligation on VAT is limited on the professional fees paid to the lawyer. Whether or not the disbursement will be subject to VAT depend on whether VAT, whether that particular the item on being disbursed is also subject to VAT. If you are paying to CAC, maybe I've not seen VAT on payment to government entities like CAC. But if a client asks you to purchase a product that is liable for VAT, and of course the entity supplying the product may charge VAT. That's how it was. So in the hand of the lawyer, the only VAT that the lawyer needs to account for is a VAT on his professional fees.
All right. And for the issue of expenses, the expenses you take care of it when you file your income tax. If it is an expenses you made yourself.
Exactly.
So to get the deductions in your personal income tax for a lawyer or a company, the same thing applies. But the VAT applies only to your professional, the money for your professional services rendered. Bilaminu Aziz, from the provisions of the VATA, the Value Added Tax Act, as amended, it is clear that the threshold for registration for VAT is 25 million. How do we reconcile the compulsory registration imposed on every business before opening a bank account?
Yeah, maybe that could be a policy inconsistency. But remember, the 25
but I
million,
want to ask, did the VAT say that 25 million is for registration or for paying VAT?
Really. No, it's for filing VAT returns. Remember,
Exactly.
when we talk about 25 million, it is just for register for VAT, you must register for VAT within a certain time. I think, is it 6 or 3 months after commencement of business or thereabout? You have to register for VAT and get your TIN number. But when it comes to the 25 million turnover threshold is on filing VAT returns in a particular year. That's why you might have met it this year, and the following year you may not meet it. So I don't think it is about registering as a VAT, as a taxable person. You have to register as a taxable person once you commence business. But whether you are to file,
I still have a question on the issue of administration. Is it filing returns or for paying the VAT?
no, it's just for, you see, that is.
So how would the tax authority know you didn't make up to 25 million for the purpose of paying VAT if you don't file your returns? For instance, you look at those in free trade zone areas and the organs, those free trade areas that are not required to pay VAT, income taxes. They still file for the tax authority to monitor what they're doing. So don't you think that this relates to payment rather than filing?
No, you see, it doesn't relate to payment because, in fact, that is the whole essence of the reverse charge mechanism. If the entity have not met the 25 million threshold, the consumer pays the VAT. If you read the provision very well, that is just the essence. That is why that reverse VAT mechanism is very, very essential in Nigeria. Because remember, if I've not made up to 25 million threshold, there is no guarantee that I will not make it tomorrow. So if nobody is paying for VAT, that means all the VAT that's supposed to be collected before I met the threshold will be gone. At the time I made the threshold, there's nothing to collect at all. If I've not made the threshold, I won't file. But as soon as I hit the threshold, I have to file. And remember, if nobody is paying for VAT, there will be arrears of filing. And of course, somebody may have to be penalized. That's why there was the clarification in the circular that says whether or not the threshold had been met. And because, of course, if the threshold have not been met, the taxable person will not include VAT in the invoice. So you, consumer, pay for the VAT. Charge yourself and pay the amount.
And the two things, can you explain what the circular says? One. Two, my question does not relate to reverse charge, but rather, how would the tax authority know you've not made the threshold if you don't file? Would the taxpayer on his own determine, oh, I don't make I don't meet up 25 million threshold, therefore I will not file. Or don't you think that what the law actually, and for in practice, that you need to make your filings, and then the tax authority will determine, oh, you didn't make up to this. And besides, some of these are even collected at the point, they're indirect taxes that
Some
you
of them,
pay.
yeah.
So with a tax person, when you move to, because I'm seeing administrative issues here,
I agree, Prof.
that is an indirect tax, it's not a direct tax.
Yeah.
So most of the time you find taxpayers paying this even before knowing whether they met up the threshold or not. So it is at the time you file your tax, file the returns, that the tax authority will know, I didn't make up to this. So perhaps if you show your receipt, then that should be refunded. If you have a society that works.
Yeah, yeah.
Or somehow they can keep it and say, okay, tomorrow, I don't know. But there's an administrative issues and lapses I'm seeing here.
Prof, I totally agree with you.
Okay.
I agree with you. You see, the problem here is that if I have not made the threshold, I could meet it tomorrow. So how would it will be difficult to determine? But of course, at the end of the year, the FIA will still have to conduct an audit to determine if you are claiming that you have not made the threshold, whether you have actually met it. But of course, because of data and record, this thing will be difficult to, and our economy is not that digitalized to the extent that the tax authority can start tracking transactions and even determine when you have met it without even you reporting. There's actually a lacuna somehow. I don't know how they're implementing it, but an interesting thing is that the tax authority now have the latitude to go after the consumer to collect the tax.
The next question, Abayemi Akenrele asked, what is the instrument for appointing a representative in Nigeria by non-resident business organizations? And how can the appointing entity ensure remittance by an appointee?
Anyway, this is not really a tax question, Doctor, if you may ask me. You can use contract. You can just write a contract. You can even write an email or a letter. Just appoint a person to represent you. And of course, if you want to know whether the entity is actually complying, you can actually be requesting for a monthly information, maybe, because once you comply for that, you have to file VAT returns, and of course the authority will endorse it. You can ask for a copy to confirm that the remittance has the money have been duly remitted.
Okay, thank you, Steve. Another one from anonymous attendee: are airlines subject to payment of VAT?
Well, it depends on for the ticket. No, it's one of the exempted items. I think I mentioned it. In the course of the lecture. Commercial, all the receipt for ticket for commercial airline, Nigerian registered commercial airline ticket are not subject to VAT. But if the airline is not registered in Nigeria, it will be subject, and people are paying for the ticket in Nigeria. It could be subject to it will be subject to VAT. What we have is Nigerian registered commercial airline tickets. Also, the parts, the aircraft parts, supply of commercial aircraft and their parts are not subject to the VAT. So that's the extent. Other than that, other supplies or either goods or services relating to airline.
Steve, let's move to other questions because we don't have much time left.
Yeah.
Adeni Thompson asks, is it possible that both should have argued against possible double taxation? If I may contribute a little bit, Steve explained what happened in both, that FIRS moved against both to pay for the VAT. People like the cab hailers and all that, that render service, collect money, and in Nigeria, most of the time, we pay by cash, right? We don't even we pay in cash here. Unlike, for instance, if you're in the developed or Western countries, you have to register your credit card with which you pay. So both argument was that I'm not a supplier. I don't supply the products. I'm not, and since I'm not, all I do is just to provide a platform with which, consumers can now connect and book a taxi. I'm not the one paying, so therefore you ought to go after the drivers, I guess, that have rendered the service for which they probably might have collected the VAT from the other. So, but the point is, I think one of the arguments one could actually make, knowing full well that in the world of today, we have that kind of service where a platform is created, you connect two parties. You are the one who determine how much is paid to the driver, right? And how much the other person will now collect. Ordinarily, you pay. So the issue of double taxation in this case, one may say, well, both should find a way of collecting the money from the drivers. So, Steve, do you think that there's any double taxation here? Because both says the money I earn, the one we earn will pay. Right?
I think the secular is asking both to pay, to use the funds in this position belonging to either the drivers or the owner to account for the VAT on that transaction. It's not asking both to make payment from his own money. So that's why I feel that to the extent that there's no money in both positions belonging to either the driver or the cab owner, there may not be obligation. Because I don't know the argument canvas in that case, because the discharging that obligation should be predicated on both having in his custody money belonging to either of the supplier or the consumer.
I think I read that case.
That's the way I see it. Otherwise, any other thing would be injustice.
I read the case. Both is saying both doesn't actually collect, like, for instance, let's use Uber. If you want to hail Uber, either in US or Canada, any of those developing countries, you will register with your credit card, correct? You're going to register with your credit card. So Uber will collect the money from you direct.
Yeah.
Uber is going to collect the money from you direct and then pay the driver. Yeah. It's not the same case in Nigeria.
No, some people do it somehow.
Majority of our people pay cash.
Yeah.
Majority of our people pay cash. And you can find an Uber driver, collect the money, and at the end of the day, switch off. So it's a problem for both.
No, Prof. Look at the scenario.
Both is not the supplier of the service.
No. Look at the thing. Look at this thing. In the both platform.
I'm just trying to play the devil's advocate, because in my argument with my colleagues in the office, I was on the other side.
Yeah. Okay.
I was on the other side.
Yes.
About this very case. So now both is saying I'm not the supplier of the service.
Yeah.
The supplier of the service are the cab drivers.
Yeah.
All I did was just to provide a platform for you to hail them and pay.
Yeah.
So I think that section 10 kind of, there's a particular provision which say that the FRS can decide who pays.
Who to appoint.
Who to appoint. So that's the problem. Yeah. The question is whether the provision of the law syncs with the natural aspect of the transactions. Literal construction, fine.
Look at Prof. Prof, look at this. If both, because for there to be any charge on the platform, both must know. Both can simply add 7.5% for every ride. As simple as that. With technology, both can
So
actually
who collects the money when the money is
wait,
paid by
that's the thing. That's the thing, because once
who collects money when it's
that's the
paid
thing.
cash?
But like you stated, it can actually operate well where this is going to be a card-based transaction. Collection
Exactly.
won't
That's
be a problem.
exactly.
Yeah, but
Exactly.
where it is a cash-based transaction, the driver will collect the money plus 7.5% VAT and pocket it.
Yes.
That's the problem.
That's the
So
difficulty.
I understand the difficulty, but I don't know how, because for one to get judgment, you actually need to bring down the realities of the situation to fore, so that the arbiter will understand the problem that could arise. Yes, if this is card-based, no problem. But in a card-based one, even if both has tweaked it platform to add 7.5% on the transaction consideration, the person that may collect it is the driver, and both cannot go and hold the driver.
Thank you, Steve. Next question. Olushino Odugowa asks, does FRS compensate its agent? Its agent, it has power to compulsorily appoint.
And there's no provision for that. In fact, I've been making that suggestion. Look, FRS is using the taxpayers to collect its VAT, and FRS at the end of the year will tell us that 30% of the amount collected, VAT collected, was spent for collection. So if I'm assisting in making the collection, I mean, I should be compensated. In fact, the current audit by FRS will tell you that they don't care to know whether the beneficiary of the service have paid VAT or not. That we have to pay. I said, we in one of the audit sessions we asked, what do you want me to do? He said I should go to court. I should use my money to start chasing the taxpayer. Meanwhile, you spend huge amount of money and budget it for VAT collection. I mean, you have to, at a stage, taxpayers should be demanding for something, for an incentive for acting as a collecting agent, because this collecting agent thing is going way too far. I agree, but you don't have that mechanism in the law. Maybe somebody should sue and invoke other legal principle to force FRS for to compensate them for acting as agent. If I spend money to, just like when you appoint an agent for debt collection, of course the agent is entitled to something. If you want me to go way too far in collecting, you have to also compensate me. But fortunately, we don't have any provision in the law sanctioning that.
Okay. Next question is from Lucky King. Lucky wants clarification on this. And he asks, did you say VAT is to be charged by law firms over services to telecommunication companies and others? There are just multiples of questions.
Yes.
Let's take this one first. Yes, right?
You charge it, but the compliance requirement will be done by the telecoms, pursuant to the FRS notice.
Now, another question, what I want you to notice is the use of law firm and partners. So is law firm a person that pays tax?
Payment of VAT is not just a person or individual. Businesses, legal practice is a business. So when you look at the definition of taxable person, it could be partnership, sole proprietorship, companies, and businesses. So when you are running a law firm, you are running a business. So you're supposed to account for VAT, and of course, you register. You can use your law firm name to open a bank account, either as an individual or as in the name of. Or in
there's
the name
a related question I want you to add. Another. How about law firms that operate in their personal names?
I think whether you are operating in your personal name or not, you are still liable. You are running a business. You can run a business in your personal name. Is legally permissible. So long as you can run a business in your personal name, and of course, when you run a business in your personal name, the only thing that the law, the only concession is that you don't need to go and register a business name if you are using your personal name, but you are still running a business.
Another question: are individuals liable to charge VAT for their services?
Yes, law firm operating as individuals are liable to charge VAT. Remember, it's not the law firm paying the VAT, it is the client. So you have to force your client, you have to tell your client, look, this is what the law requires me. Without you charging VAT and including VAT in your invoices, you are violating the law and you could be held liable. As long as you have certified the 25 million threshold. If you are operating and you have not made up to 25 million, the compliance obligation will not be on you. But of course, once you hit the threshold, try as much as possible to comply.
And I just want to ask a question that may help the person who asked this question to understand. My question is, are legal services vatable? Whether it is provided whoever renders that, is it vatable?
Of course, yes.
I think that's the answer.
As long as it is not in one of the exempted services exempt from VAT, it's not goods. We are not supplying crayfish and tomato.
So
we are providing services.
The answer is a vatable service. So,
but also let me also explain for purpose of our education. If a law firm is providing services to a person or a company outside Nigeria, VAT is not chargeable because it now qualifies as exported services. Although there's been a running controversy with the FRS on one provision in Section 2 on when supply is deemed to be made in Nigeria. But when you look at the exempted services provided by a person in Nigeria to someone outside Nigeria is clearly VAT exempt. So if you are rendering services to someone who is not in Nigeria, the services will be is clearly exempt from VAT. But if it is someone within Nigeria, it is not exempt. So VAT will be charged.
Then now, actually, you've already answered this question. So how about the 25 million rule introduced? You've answered that, so we're not repeating that. 10th chamber, I need more clarification on the difference between VAT and consumption tax.
Yeah, the difference is based purely on the collection mechanism. The consumption taxes are indirect tax. They are indirect taxes like VAT. However, VAT collection takes multi-stage process. Let us even use the Lagos State consumption tax. You only pay it once you consume the product in a hotel or you use the facilities in a hotel. Utilizing services of a hotel. But for VAT, the collection process is multi-tier. You collect from at each stage of the production or distribution process when value is added. That is why it is value added tax. Other consumption tax like excise duty, once you import goods, you pay a particular amount. That's the end. If you import a good that is liable to VAT, you pay VAT at the point of entry. The distributor will still have to account for VAT.
We have a lot of questions and there's no time, so let's have to be brief.
Sorry,
if we want to attend some of this, otherwise a lot of questions will be left unanswered. Japhet or Powerley asked, does the state's internal revenue services, does the state internal revenue service have the, does the state internal revenue service has the jurisdiction to collect taxes and rates over banks, VSAT and MAST to the exclusion of NCC? Of course, this is not a VAT question, but Chairman, what do you have to say?
It's not a bad question. If there's a law validly made by the state internal revenue, of course, it could collect those taxes. But I don't know the nature of tax in question. And I don't know the nature of tax in question. For those VSAT and MAS, of course, is on a land. You can be paying tenement rate or land use charges, on it. And that's it. So it depends on whether there is actually a law duly enacted by the state House of Assembly for that purpose. It is possible, but not. Of course, there could be regulatory fees paid to NCC because telecom is under the exclusive legislative list. So there could be regulatory fees to be collected by NCC. So that's it.
Well, another simply to ask, if you have your time, you can go and look. Most of these things are spelled out, in the exclusive or concurrent list. When you look at item 58 of the exclusive legislative list, which is on stamp duties, item 59, which is on capital gains, incomes, and company income tax, and the rest.
Sure.
So if you move to the concurrent list, that's where item 7 says the National Assembly can make laws authorizing State House of Assembly to collect personal income tax. So if it is the tax targeted on the company as a person and not a law, I doubt whether the state will not justify that, even if there's a law supporting it. But if it is over land use or land charges or tenement rate, so we need to see the law supporting that. As Steve said earlier, there's no way you can impose any tax without a legal backing. There must be a law supporting that. Then it's now left for you to look at the law and look at the subject matter to see whether the subject matter upon which the State House of Assembly enacted the law falls within its constitutional province. Thank you. The next question, I think, what is your position on the charging of VAT and stamp duties on transfer? What is your position on the charging of VAT and stamp duties on transfer of funds between and across owners of accounts?
Well, I think what you pay is this electronic transfer levy, not VAT. You don't charge VAT on money unless the transfer is for supply of goods or services. You don't just charge VAT if you are transferring money. Unless, however, when there is a transfer in a bank, the bank also have rendered one form of services to the other. And if the bank charges service fees, the service fees will be liable to VAT. But mere transfer, I don't transfer from one account to the other, VAT is not applicable. But like I said, of course, when you transfer money, bank has rendered one form of services to or the other. If there's a service charge, the service charge component, not the entire transfer, will be subject to VAT.
They also charge stamp duties.
Yeah, they charge electronic.
So they could say that that is an electronic document.
Yes, yes, there's an electronic tax for that transfer.
Is a tax on document.
Not between. I think there's a threshold and also transfer between from one account to the other by the same person. Also not the charge. There is an external transfer, a transfer from your account to a third party. There's a charge of 50 naira for the transfer.
Chief Opera asks, I want to find out if VAT is chargeable on fees charged by offshore lenders for loans granted to Nigerian company. I mean offshore, fees like management, advice.
Yes, of course. Okay, offshore lenders. For
offshore lenders, the lender is not. The lender is offshore.
Are not in Nigeria. Yes. Okay. There won't be any. To the extent, of course, if the offshore lenders are not in Nigeria, the services. Yeah, the services is liable to VAT. It's not exported because there is actually imported services. I just try to draw the distinction because the offshore lenders are providing services to the Nigerian entity. That's why I see it. And to the extent that that is what you have in mind, there will be VAT.
Well, So many questions to answer. We are not going to answer this one. We say, what are the various VAT tax percentages in other African countries and the UK and USA?
I don't practice in those jurisdictions.
This one is outside our...
Even if I know yesterday, it could have changed and maybe. But of course, there have been the argument that our VAT rate is one of the lowest in the world. I think South Africa charges 15%. I'm very sure of that. I don't know of other countries, but our VAT is low. Is low somehow. I don't know whether it's the lowest in the world, but significantly low at 7.5%.
Haruna Musa, can you throw more light on the issue of exemption base? I think we've answered this. We're not going to repeat this 25 million thing. There's no time. Chike Anyang, what effort has government made to ensure total compliance on charging? I don't know.
Answering, I'm not in government. I'm a legal practitioner like you. Of course, we know that government effort on tax compliance is low, but it's still increasing, and we hope it keep increasing. But I can't say. I don't have the statistics to say the level of.
Steve, we have to. Well, I may give you a grace of 5 or 10 minutes more.
Okay, sir. So I'm done with this one, sir.
We're supposed to stop. Anonymous attendee, Mr. Steve, do you consider the proliferation of finance acts every year a needless complication of the VAT administration system and the tax system generally? Perhaps a periodic amendment of VAT and every other principal tax statute would be a better option.
I don't think so. I don't think so. It's advisable. Tax is a fiscal instrument of government. So if government is, formulating its fiscal policy and follow it up with finance act, I mean, it's something that is required. It is even good for you and I who are legal practitioners. You have something to tell your client every year, something new. The position. I think most countries do enact tax laws frequently. It may not be annually, but before the.
I think most countries
is annually, Prof.
Some countries do have changes every year, depending on how the economy swings. Yes. You use the tax law to, it helps in managing the economic policy and as well responding to challenges the economy may be facing. So
yeah, it's not a bad thing.
In as much as it is difficult, and that the issue of whether predictability in the tax system, which I can see the point is trying to make, but it's not a bad thing. It's a question of how we manage it, as long as we don't abuse it. Anonymous attendees, does VAT payment include the whole amount when it pertains to goods, or is it only on the cost price minus profits?
Everything. But like I said, in the VAT accounting, the input and output VAT will still balance this. When you apply the input output VAT, you find out that the VAT will be charged on the value added eventually. But when you are accounting for VAT, depending on the spectrum where you are in the transaction chain, you may have to account for everything. But of course, if they have been input VAT, you have to deduct the input VAT from the output VAT to get the actual value.
There's no time and lots of questions. Bola Tumi and Marshall, 2 questions. 1, to what extent is it true that VAT is tax paid on goods, while withholding tax is tax paid on services?
Well, it's not true. VAT is paid on goods and services, unless the goods or services are exempt.
Then withholding tax?
The percentage of withholding tax varies depending on the the services equation or the payment due, because of course it's payment due from one person to another.
Depends on the payer.
Yeah, the payer. Yeah, payer. Yeah, exactly. It's based on payer. That's it.
If the company 10%,
eventually it's still an income tax, so it's the same rate. Yeah, you're right.
Company 10%, individuals 5%.
5%.
Okay. Anne Godwin Chizoba, I have always wanted to know when and how electronic transfer levy charged currently by banks differs from stamp duty that we all used to in banks' description of the debits after transfer or receipt of money. Let me stop here first. He's complaining about the bank charges, but it is called electronic transfer levy.
Is the definition, there's a redefinition.
And how is it different from stamp duty?
Electronic is there another? Well, there is a strand of stamp duty. If you look at the definition of documents under the Stamp Duties Act, electronic receipts qualify as a document.
Yeah.
So you know we are
that used to be a problem until that amendment was made.
Exactly. You remember Kasmal's case that went all the way to Supreme Court.
Correct. Now, a following question by the same man in Chizoba. Does it mean the banks have unilaterally? Okay, I think you've answered that. Ahmed Musa. I am still confused with the way Nigeria is operating multiple taxation, like the federal, state, and local governments will put tax on same products, which I consider illegal. In other words, how do we curb illegal taxation? Please.
Anyway, that has been a problem. It has been a big problem, but I think the mistake was made when the constitution was.
But the question is actually, I think what the operating word is that taxation on the same product by three different levels of government.
That's it. Well,
like, do you pay income tax to federal government and pay income tax to state and pay income tax to local government? Do you pay VAT to federal government, which is collected by FIRS, and pay VAT to state? Okay, we may say sales tax, that order, or and also pay to local government. Do you pay tenement rate to state, local government, and federal? Are you getting what I'm saying? So the multiplicity of taxation.
At that level, a lot of things happens outside what we see. Even some taxes have been imposed even without law. Is a problem. Is a problem. I mean, that still shows the level we are as a country. I mean, we have the joint tax board that should be able to harmonize this and is a problem, is a policy issue.
Yeah, again, multiple taxation has always been a problem. We have almost two different study groups on this. I think Dr. Phillips shared this category, and there are two different study groups that produce reports on all this. And even they mention about what local governments are doing, radio tax and all that. As you're moving with your vehicle in each state, you are going to pay. They're using a nail-studded distance spike to block your vehicle and all that. It has always been a problem. And in this country, Nigeria have set about two different study groups, and they have their reports. The reports are there. So multiplicity of taxation is a problem, obviously. So it is not necessary, it does not necessarily need to be on the same product, but I think the current committee set up by the federal government, headed by our friend in PwC, I think it's one of those things they're going to look at to see how these things are streamlined in order not to discourage business. You know, people don't earn much, and at the same time, there will be a lot of taxes, bring this, bring that. Okay, Abiodun Adeneko, thank you for this session. I do not know if the topic of withholding tax has been dealt with in a previous session or will be dealt subsequently. I have question. No, that's just
we didn't deal with we have not dealt with that separately, but we have. But I think Prof.
In the course,
Sani mentioned it. You also, I think you also mentioned something on withholding tax. It's not really a separate tax. I mean, withholding tax is very simple, if I may say. I mean, we can't give it a whole distance, a whole session. It's part of income tax collection mechanism. We haven't dealt with it as a standalone topic, but we have mentioned it or answer questions relating to withholding tax in the course of this session.
Thank you. We're already 12 minutes past the stopping time. Thank you, Mr. Steve. There are a lot of questions. I'm sorry if your question is not answered. Steve's slides will be circulated. We will do this the moment we finish our class tomorrow. We'll collect all the tax lectures and the slides, and that will be shared to all the lawyers, especially those that have registered. We'll have your email. We'll keep records of participants. So this will be sent to you. And I'm very grateful to Mr. Steve for the job well done. Very detailed. If you pick the slide, if you pick his lecture notes and go through it, I'm very, very sure some of the questions you answer that yourself. Thank you very much, Mr. Steve. Thank you, participants.
Thank you, Doctor. I really appreciate for your wonderful assistance.
So we'll call it a day, and tomorrow we'll be having another session, and this one will be on tax dispute. Honorable Justice Dimba will be here, and Lanre Lasisi Phillips, chairman of TAT in Lagos. So it's going to be a very true academic explosion, and also to understand what's going on in the tax appeal tribunal and the Federal High Court. I encourage everyone to attend. Thank you so much. Bye-bye.
Thank you very much. Yes.